minutes late, 2 3 minutes late. Sorry about that. I was actually getting caught up in another discussion, and that does happen from time to time. So we are here at the free to the public Algo Factory live lab. So we do this for about 30 minutes, and then we hop off and we go over to our private group. We continue for another hour, and it is designed to be around the market open every day, which happens in about it happens in now. No, happens in an hour. So we kind of look at what's happening pre-market, and we go through some charts. We answer questions, and we have a good time. We make some jokes a lot of the time. Sometimes it's a pretty relaxed atmosphere. So I'm going to go ahead and spread the link a little bit, see if anybody wants to come in from our Rogue News group here. Give me just a moment. All right, the link is now spread like peanut butter. Yeah, so let me jump over to see if there are any comments yet, see if there's any questions. I know I was kind of talking before the show with some of our private members about the indicators that, one of the indicators I'm using in trading. We got that answered. So let's see here. I know we got a couple of people watching, pretty scarce this morning. That's fine. It's, it's the whole Wednesday after the holiday. It's a slower week. People are kids are getting back into school. A lot of life is kind of like, if you will, restarting right now. We had a good trade yesterday, so let me see what's going on with that. I mean, I'm already out of the trade, so but it was a good trade, and it looks like it got out just in time. I'm gonna go ahead and prep the screen. Let's just jump right into the content here. So 1 second. Okay, screen share. And let me zoom in. We're going to take a look at the euro. And yeah, right now the dollar, we were talking about this yesterday, and the dollar has been getting strong. Let me actually pause the screen for a minute so I can exit out of the trade station. I won't be doing any trades for a while, not until right as this show ends. There's going to be some economic data that comes out. It's the ISM PMI. We'll talk about that too, but let me reshare the screen. Okay, screen will pop up here now. So what we're looking at, and let me do this, not that, this. There we go. Now the screen's a little bigger, a little more visible. Okay, so Gigi says, good morning, all. And we do have a couple people watching over on the YouTube. Valley Girl is saying a helpful hump day to all in Algo land. Love it. So let's take a look at the euro. Take a look at our trade from yesterday. Let me grab the screenshot of the trade. Okay, so... okay, so if you actually want to see how the trade started, you have to watch the live video. I started at the end of the free to the public live lab, the one we're watching right now. So you'll see it then, right? Let's see if I can open this in a... Okay. Let me roll this up here so you can see how, once the trade kind of went in progress. It's hard to see on this screen. I'm not sure how to bring it up otherwise right now, but you can see it started going into profit. It was a pretty good risk to reward, and I actually jumped out before it got down there because I had an algorithmic exit happen. The euro is in such a place right now that it wants to pop up, and in fact, right after I got out, it did pop up, and it would have gone against me, but it would not have stopped out, and it may continue down in my direction. But just at the moment, where there's just a lot of kind of high time frame data saying it wants to kind of turn around and head back up, and it so far looks like I made the right choice on that. I'm going to scroll down a bit and get a more kind of up-to-date picture as to when I got out. You can see that it was a little more than halfway to target. And when I got out, this picture's a little after I got out, because I go ahead and hop out first and then take a picture later. And this was like a 1.8 to 1. So I did do, it was like nearly a 1 to 1, not quite when I actually exited. So always good to have at least a 1 to 1. And again, it was an algorithmic exit, right? So it wasn't like I hit a target. I have algorithmic triggers that say, okay, it's time for me to get out of this trade, and I exit. And that way, in case it goes against me, it's not going to be a problem. And if you look at the chart, I'm going to expand this really quickly. Let's see here. I got out right around, let me bust out my arrow here. It's a different one. It's going to be here. I got out about here, right? And as of now, price has turned around and headed back up. And I'm seeing signs in the algos that it will continue to head up. I could have gone long, but it was against my rules. I had another individual in our trading room think that it was going to go short again right about here. And it may have, it could have, but it was against my rules yet again. So I couldn't go short. And I'm glad I have the rules. I'm sorry. Yeah, I couldn't go short, but I followed the rules and it did go up instead of down. But again, I have a lot of data saying it still wants to head down at some point, right? So what I'm looking at is a possible liquidity grab, not unlike what you're seeing on the way down here. But the problem is that higher time frame is indicating it's ready for a much stronger liquidity grab. So what do I mean by liquidity grab? So price is heading down, and it's going to take a break, grab a little liquidity, head down, take a break, grab a little liquidity, head down, take a break, grab some liquidity, which it appears that that's what it's doing. However, enough of these little grabs, you're going to see a big one after a while. And in order to kind of view that, you almost have to look at a higher time frame. So let me do that. And you can see the pattern. We'll look all the way up here on the, so I was looking at the 30-minute. Now we're going to look at the 18-hour. So basically the daily. And on the daily chart, you can see everything that I just talked about, the little, up, down, up, down, up, down. That was right. I just drew this where my arrow is going right now. That's what I drew, right? So what you just saw on that prior screen are those arrows. But what do we have on a higher time frame? We have the same thing. It's fractalized, right? So you have a move down, grab some liquidity, move down, grab some liquidity, move down, grab some liquidity, move down, right? So there might be a liquidity grab. And if it did happen, and I think it will, I think we might be there, we might not yet. The pressure is really strong on the dollar right now. And which means that this is the euro versus the dollar, which means the pressure on the dollar means price is heading down based on that pressure, right? So we have a lot of reasons to think that price will head back up in a strong way. One of the main reasons is going to be structure at the bottom here. We're approaching that structure. So it might be that we get maybe like another small move down, maybe not. It's, that the algos will tell us, maybe like another quick move down here. And then I think we might see a strong move up. And it could be like, okay, so let's review really quick. The screen I drew earlier on the lower time frame is just this right here, this little area that I'm talking about, right? So no matter what, we could see a retracement. This, what I just drew, is an impulse, and it's just little pullbacks in the impulse. So if I were to draw that impulse, it would be as simple as this right here. This is an impulse, okay? So this is like when the market makes a strong move in one direction. And every time the market makes a strong move in a direction, it's going to move back a little bit. It's going to take a breather. It's going to get tired, and it's going to breathe. So you're going to have like a strong move in one direction, right? And then you're going to take a breather up here. Strong move in one direction like this, take a breather up here. Strong move in one direction like that, take a breather up here. Well, now we're in the middle of a strong move, and it appears that it may be ready now or soon to take that breather on a higher time frame, right? Which this is like almost the daily right here. So we might get maybe anywhere from 5 days of price reversing upwards, and it could happen starting yesterday. It might not happen yet. It might head down a little bit for another day or two and then start heading up, right? And this is on the 18-hour. So remember, though, that this structure right here is something with which price must contend. So as price approaches that structure, I will be very reticent to take any shorts that go past there. Right now, I wouldn't mind if the algos tell me that it's okay to do where price heads up like this and then goes short again. I'm good with that. That's that there's plenty of room on that, especially because we're looking at a high time frame. There might be like 5 or 6 trades going down that way, right? Because if I draw that, I'm going to redraw that. So let's just say price heads back up. Oops, let's get our line here. Let's just say price heads back up and then heads back down. Okay, and then we're going to jump to a lower time frame and we're going to see what that looks like as we head to a lower time frame. Now, I'm not saying that's going to happen. I'm just going to show you what it looks like if it does on a lower time frame, because this is the time frame on which I was trading yesterday, right? So I actually have to redraw these a little bit because those arrows on such a high time frame that it's not like, there. So I mean, these arrows, those lines I just drew in a high time frame. These are half hours per candles. There's a lot of action in here. I could probably get, if the algos say it's okay to go long, I could probably get like a long here, right? And maybe, and that's like going to take a day, and then maybe a long like here, and that's like going to take a day, right? There's a lot of trading in this period if in fact price does reverse to that degree, especially with the structure being so far down there. However, the algos do indicate that there is more down to go. That can change, but when that does happen, I can also take lots of shorts all the way down here, lots of room to fall. So and that's kind of my plan right now. I'm looking for some stronger indication on the algorithms that it is ready to take a breather, or is it going to continue down? And if it continues down, if price decides to want to say, maybe head up a little bit more and then head down towards that support, then I'll just start my shorts and I'll just keep taking shorts on the way down. So that's how that goes. I look for a high time frame sort of move, and then I capitalize on that move by trading in that direction. Okay, with that support, I raced the line, but I think the support's going to be like down here, right around there. So that's the plan on the euro. That's what I have going on that. So we got MavBet. Good Wednesday morning, all. Thank you. Remember, if you're watching on YouTube, please like, subscribe, do all that stuff, spread it out. Share it with your friends. The more people in our community, the better. That's for sure, because we have a lot of good resources. We brought an individual on who is actually taught himself how to code and is now coding indicators like on TradingView. Like, he's building these little arrows and dots that you see on the screen that kind of help you trade. He's building those and he's teaching himself how to do it, which is something with which I'm particularly impressed, talking about Trev. And I think he's probably watching now, or he will he's either watching now or he might jump in for the more kind of advanced non-beginner lab that starts in about 12 minutes. So we'll see if he's able to make it today. So we got a few people across the pond. Yeah, Valley Girl said it. We need you. So more people the better. Again, we haven't really pushed out the marketing yet. This has just been all internal. We've been only sharing this with people who are kind of in the inner circle of the Rogue family. So we don't have a huge crowd yet. It's big, it's a good sized crowd, but we're talking about really expanding. So let's take a quick look at the data and what that looks like today. So we have the ISM data coming out at 10 a.m. EST. It's 8 a.m. my time in the Mountain Zone, but you have ISM services PMI. So we talked about this. I think I talked about it at length the last two Rogue shows, last two Thursdays on V's channel, which, by the way, V the Gorilla today is not feeling all that great. He's a little under the weather, so he's going to take a break. So we'll let him do that. let them get some rest. So this is the ISM. There's two PMIs that come out, right? So the PMI is the oh something purchasing managers index, I believe it stands for. And so what it does is it's a level of diffusion index based on surveyed purchasing managers, excluding manufacturing industry. Okay, so this PMI excludes manufacturing. That's actually important to know. And then I think the other PMI should come out Friday. Nope, it's not. The other PMI I think actually includes manufacturing, but either way, oh, okay, services PMI. That's why it excludes manufacturing. So you have two things in an economy. You have goods and you have services, right? And so goods are something you manufacture. Services are something you provide. A good is going to be a widget. You manufacture a car. A car is a good. You manufacture rubber bands, staples, kites, whatever. Anything you could buy at the store is a good, right? And a service is going to be like say you're a waiter and you serve food, or you're a doctor and you're helping people. And of course, there are goods that doctors will sell. There is a lot of goods doctors buy, like syringes and whatever, gloves, whatever. But in the end, the service economy has become a little bit more important, right? I mean, I don't know if I want to use the term important, because ultimately I actually feel that the goods economy is the most important. Manufacturing is actually what's going to power economies, because you're taking $100 worth of metal and plastic and rubber and silicone and you're making a car. I might be a little off on the materials there. It might be closer to like $1,000 in materials, but you're taking basically $1,000 of labor and materials and you're making a car. Or let's say it's 2,000, whatever the number is, you're multiplying the value greatly, right? And a lot of that is, of course, due to automation now. But even if you take a look at it from a very simple perspective, manufacturing is key, because you have somebody who, in an ancient economy, let's say they're a woodworker and they can go cut down a tree, so they're spending their labor time, and they can use that tree to make like 20 chairs or something, right? Maybe 50 chairs, and that's their labor time, right? Plus they have to, they have tools that they bought. They only have to buy them once every so often, if a tool breaks, whatever. But generally you have to buy a good tool like a few times in your life. For somebody who is a manufacturer, perhaps you got to buy it once a year, whatever the number is. It's a low cost per unit. You buy you buy a saw, you make like 1,000 chairs with it before it breaks, right? So you're not, if a saw is worth $11, you make 1,000 chairs, you're talking about a hundredth of a cent per chair, or whatever. It might, I might be a little off, it might be a tenth of a cent a chair. So long story short, your input as far as your materials is going to be pretty low. You're chopping down a tree, you're using an axe, and then you're using your time, which is really what the key is there, and your knowledge as a chair manufacturer. You can build a chair 100 times better and probably 100 times quicker than your person who doesn't know how to build chairs, right? So you're spending a lot less time and you're making a lot more chairs. Now, somebody who needs a chair is going to pay, whatever it is, $20 for that chair, right? And if you made you could probably make 1,000 chairs in, like a month or whatever the number is. And so, you're now making $2,000 a month, or, whatever the number is, right? So this is why manufacturing is important, because you have somebody with knowledge who can leverage their time and a very small amount of materials to make something that has a lot of utility, and wealth is created. And then somebody who creates wealth in another way due to their skill set is going to be able to trade their money to gather wealth, and both sides have utility. That's wealth, that's manufacturing. However, in our economy, now that we have really kind of sent a lot of our manufacturing overseas, services seem to be important, because we're in a time when everything is financialized. So you have a lot of money flying around. The West, and quite frankly, the United States especially, is benefiting from the whole dollar reserve currency situation, where we're able to export inflation elsewhere and be a mass importer. So we just have a lot of money, and right now that money still has value that we print out of thin air. And so people can continue to sort of feel like they're thriving on a service economy. However, as the world is kind of, moving away from the dollar, and has been for probably a couple decades, very slowly, now a lot more quickly than it used to be, the ability for the United States to continue to rely on the service sector is going to decrease because we're going to have to start manufacturing again. And otherwise, we're going to have to become, well, we will continue to be a net importer. And when you don't like manufacture, that's no bueno. You need to manufacture in order to be a healthy economy. I'm sorry, you can't just import things. You can't just like export raw materials and import, you know, import manufactured goods, and you have a couple of oligarchs in your country that own the manufacturing overseas. Like you're really cutting the public out of a lot of wealth, and that's going to change. But for now, services matter, and service PMI is coming out. So all of your purchasing managers in the service industry, which right now matters a lot in our economy, we're going to find out whether or not they're buying more or less stuff for their business. And if a service-based company, service-based industry is buying a lot of items for their business, then that's an indication that the economy is doing well. And if a service manager, if a purchasing manager for a service-based industry is buying less things, that's an indication of a slowdown in the economy. So if this number indicates a slowdown, then a lot of the wisdom, quote unquote, of the market is that we will probably see a cut in rates. And already there is a rate cut. I'm talking about the prime rate from the Fed. There's already a Fed rate cut being priced in for some time next year. And of course, whenever we hear those things, people want to invest in the market. And if we do see a rate cut and we see the printer turn back on, then of course the stock market will go up because money gets cheaper. So that's the idea here. Now, if the diffusion index looks good, meaning if the purchasing managers are buying items for their business at a higher rate than expected, that's going to indicate that the economy is stronger than expected and will probably be bad for stocks and bad for anything that goes against the dollar, whatever, crypto, any other currency, things like that, because the wisdom, quote unquote, is that if the economy is healthy, then the chances are lower of a rate cut coming soon. And in the rate cut doesn't come soon, then money is more expensive, and money that is more expensive is harder to put into markets, and markets will deflate. So that is how we can look at this information. And I think that some of the better predictors that I work with, like the people who analyze the macro on this, think we're going to see poor data and think we're going to see things like Bitcoin and anything else kind of go up. Even it might be a little bit, but we'll see. It might not be much more than expected. It might be as expected. We don't know. And we don't know how the market's going to react, which is why I tend not to trade the news. So just a little bit of a lesson on, again, the data and what it means and how one may or may not want to be able to leverage that data while trading currencies or anything else. So I'm going to go ahead and end the free to the public live lab, the beginner live lab here. And we're going to go ahead and move on to the private chat. We're going to talk about Bitcoin. There's a Bitcoin trade that we have been in for a number of days, and I still think it's good, even though it's kind of gone against us a little bit. But it keeps showing some promise, and the data is there for it. So we're going to talk about that. But again, thank you all for anybody who's watching. Like, subscribe, follow, share with your friends. A lot of free, good data on here. And again, if you are, not in our group, and you still want to learn, you can ask us questions. We don't give investment advice of any kind, but we do answer questions about the nuts and the bolts and of trading. We talk about, if I see a chart, do I think that chart is going to go up? Do I think it's going to go down? It's just a chart forecast, and you're welcome to ask those kind of questions in here, even if you're not an Algo Factory member. And at some point, what's going to happen is there are going to be so many people that asking questions is going to require like a super chat, things like that. So get it while you can for free. All right. Okay, here we go.